since they have so many advantages over conventional cars, including reduced pollutants, less maintenance expenses, and better performance. Electric vehicles are seen as the transportation of the future, but starting and maintaining an electric vehicle company is not a simple feat. It needs a significant amount of funding, creativity, and client confidence. Attempts to compete in this new industry have resulted in financial problems and even bankruptcy for a number of EV enterprises. Even Tesla, the most prosperous electric vehicle business globally, almost went bankrupt in 2008 and again when the Model 3 manufacturing spiked between mid-2017 and mid-2019. Rivian is in a similar situation as of late. What then is the issue, and what can Rivian do to make things better? Come talk about how selling EVs is costing Rivian money. It's quite difficult to launch a new electric car firm these days. Let's examine Faraday Future and Lordstown Motors, for example. In an attempt to compete in the electric vehicle industry, these two businesses have had financial difficulties, manufacturing delays, and legal issues. However, Rivian seemed to be a potential option, having supplied electric vehicles for over 2 years. However, the business continues to spend cash at a rapid pace. Positively, Rivian had a strong third quarter statistically. This fiscal year, they plan to deliver 52,000 automobiles, above their initial projection of 50,000 vehicles from their plants. Rivian was able to deliver 16,304 cars from its usual Illinois production unit in that quarter, compared to the second quarter when they shipped 23,000 fewer units. This is a significant increase. It's also important to note that this delivery total exceeded the 14,740 units that the experts had projected. The company's innovative features, such as the tank turn that allows the vehicle to rotate 360 degrees in one place, have thrilled Rivian's clients. Although Rivian's delivery numbers seem to be increasing, there is rising worry over the substantial losses the firm is experiencing with each car it manufactures. Certain experts have estimated that Rivian loses over $33,000 on each Ronette pickup vehicle sold. This is a result of the significant manufacturing, R&D, marketing, and customer support expenses that Rivian must incur. In addition, Rivian faces competition from other electric vehicle manufacturers with more resources and expertise in the market, such as Tesla, Ford, and General Motors. Ford was formerly one of the main investors in the up-and-coming electric car company Rivian. Originally, Ford intended to incorporate Rivian's skateboard platform into one of its next vehicles. The skateboard platform is an adaptable modular EV platform that works with a variety of car and battery configurations. But as time passed, Ford made the decision to modify its plan. Instead, they decided to develop exclusive electric vehicle chassis for their line of cars. This decision not only changed Ford's course but also signaled a major shift for Rivian. Ford withdrew its financial support from Rivian at this period, signifying a change in focus for both businesses. 2019 saw Ford spend $500 million in Rivian. However, Ford eventually sold part of its ownership to Amazon, another significant Rivian investor. In addition, Ford said that it will create its own electric vehicle platform for the F-150 Lightning pickup truck, a vehicle that is anticipated to rival Rivian's Ronette. Similar to several other pioneers in the electric car sector, Rivian had challenges while trying to increase its capacity for manufacturing. These difficulties resulted in changes to the staff and the resignation of a few senior leaders. Rod Copes, for instance, departed Rivian as its chief operating officer in July 2023. These two businesses now find themselves practically in competition with one another in the electric car industry, which is a significant obstacle for them both to overcome. Ford benefits from a broad network of dealerships, a devoted client base, and a solid brand name. A direct-to-consumer sales approach, robust support from Amazon and other investors, and appealing and inventive items are Rivian's advantages. The challenges of satisfying the strong demand, cutting expenses, and raising the caliber of their EV goods must be met by both businesses. In fact, Rivian informed its shareholders of this estimated $33,000 loss per car in a letter to them and in the second quarter of the 2023 financial report. Rivian reported a significant loss of $32,595 per car in the second quarter, while making between $1,100 million and $1 billion in sales. Due to this, the company's Q2 2023 gross margin was negative by 29, meaning that every car it manufactured was losing money. Rivian blamed the substantial expenses involved in releasing its first cars for this negative gross margin. Increasing manufacturing capacity, recruiting more personnel, and funding research and development were some of these costs. The corporation said that as it increased production, cut expenses, and over time added additional goods and services, the gross margin would rise. However, a number of experts and investors continue to have doubts over Rivian's capacity to turn a profit anytime soon. They draw attention to a number of the company's difficulties, such as the severe competition it faces from other electric car makers like Ford and Tesla, the need to live up to the high standards set by customers and shareholders, and the effects of the global chip shortage and supply chain disruptions on the automotive sector. As one of the most well-known and valuable electric car firms in the world, Rivian has a market valuation of more than $100 billion as of October 2023. Over $250 million have been invested in the firm by well-known supporters like Ford and Amazon, and over 100,000 car orders have been placed. Rivian has only delivered around 20,000 automobiles to far, therefore it is seen as untested, which has led to criticism of this significant price. Even though Rivian prices its cars at around $8,000 each, the company is losing about $33,000 on each vehicle as a result of growing manufacturing expenses, as the Wall Street Journal recently pointed out. This financial barrier is much more difficult when you take current market developments into account. In August 2023, the average selling price of electric vehicles was reached to around $53,376 according to statistics from Cox Automotive. Rivian's objective of keeping the price tag each car at $80,000 becomes harder to achieve in this cutthroat market. According to Motor Intelligence, Rivian's strategy is renowned for its heavy emphasis on producing luxury trucks and SUVs, which account for around 83% of the company's overall sales. Because it takes a lot of money to produce high-end electric cars, the company's concentration on premium automobiles may draw in a certain market segment but also adds to its financial losses. According to a Wall Street Journal story, half of Rivian's $18 billion in cash reserves have already been used up in only 2 years, indicating that the company's financial resources are being stretched due to these increasing losses. The company's usual Illinois factories' restricted manufacturing capacity and the expensive cost of procuring certain components are the main causes of this cash depletion. Nonetheless, there remains hope for Rivian in the near future. Its regular plant is producing more, which may ease some of the financial strain. RJ Scaringe, the CEO and creator of the firm, is proactively reducing expenses and optimizing operations to minimize losses. As a consequence, the company's losses are progressively decreasing and it is starting to experience some recovery. By the end of June, Rivian was still struggling with large costs, which were more than $1 billion every 3 months. This demonstrates the ongoing difficulties the business has in its pursuit of profitability and long-term development in the very competitive electric car sector. Wells Fargo analyst Colin Langan has voiced worries despite continuous attempts to cut expenses. He doubts that Rivian will be able to meet its lofty target of turning a profit by the end of 2024 with only these steps. According to Lang, the business may need to think about making a more significant strategic change, like adjusting prices for the whole lineup of cars. Even while the first estimate of a $33,000 loss per car makes some concern, it's important to understand that this figure represents a significant improvement over prior quarters. With a loss margin per car of $37,000, Rivian is far better off than it was in the first quarter, when it was losing almost twice as much, or around $67,329 for every vehicle sold. The primary reason for this change is that Rivian delivered fewer cars in the first half of 2023. Even considering that Rivian produced more cars in the last quarter of 2022 than in the first quarter of 2023. The business nevertheless recorded a significant loss of $124,162 per unit. As a result, the overall financial picture becomes worse the more financial data we examine. To put it simply, Rivian has improved over the last several quarters in terms of cutting its losses. This does not, however, lessen the significance of cost-cutting initiatives to achieve profitability. For every automotive firm to succeed, finding the ideal balance between increasing output, lowering manufacturing costs, and increasing sales volumes is essential. Their third quarter financial performance may determine how much they may cut expenses and perhaps change pricing. On November 7, after the end of the market, Rivian is expected to reveal its quarterly financial results. By then, we will know more clearly whether the company's losses have decreased even more, and if it is getting closer to using up its cash reserves before turning a profit by the end of the following year. When Rivian's financial results are made public, we will keep a careful eye on their financial situation and update this report accordingly. What are your thoughts on this? Tell us in the space provided for comments below.